Welcome to our channel. If there's a stock you'd like us to analyze, please let us know in the comments below. Your feedback helps us create the content you want to see. If you enjoy our videos, consider buying us a coffee to support our work. We're saving up for a new computer to bring you even better analysis. Today, we're putting PayPal Holdings, ticker symbol PYPL, under the microscope. We'll break down its recent performance, technical indicators, and possible scenarios for the coming days. Ready to analyze PayPal from every angle? Let's get started. Start with a general overview of PayPal's recent stock performance. Over the past 3 months, PYPL has experienced significant volatility. The stock started around $70 in June, climbed to a high of nearly $79 in late July, but then declined sharply to about $65 by September 10. Since then, there's been a slight recovery, with the price rising to $68.62 by September 17. Despite this uptick, the overall trend remains bearish in the medium term, though there are some early signs of stabilization. This sets the stage for a deeper dive into the numbers. Now let's look at price and volume action. Throughout this period, trading volume has been quite variable. One notable spike occurred on July 29, when volume surged to over 42 million shares as the price dropped sharply from $78.22 to $71.45. More recently, on September 17, volume was about 18.6 million as the stock rose to $68.62. The price pattern shows lower highs and lower lows, which is typical of a downtrend. However, there have been some counter-trend rallies, and the Chaikin oscillator, though positive, remains relatively low, hinting at some improvement in money flow. Moving averages are a key tool for identifying trends. Currently, PYPL is trading below most of its moving averages, which signals a bearish trend. The 5-day simple and exponential moving averages are just below the current price, suggesting a bit of short-term bullish momentum. However, the longer-term 200-day averages are well above the current price, confirming that the overall momentum is still negative. When short-term averages are below long-term ones, it's a classic sign of continued bearishness. Let's break down the technical indicators. The MACD is negative, but the histogram shows a slight improvement, indicating bearish momentum is easing a bit. The RSI is near 50, which is neutral, meaning the stock isn't overbought or oversold. Williams %R and Money Flow Index are also in neutral territory. Stochastic indicators and the Commodity Channel Index are slightly negative, while the ADX suggests the trend is weak. The Arun down is high, confirming the downward trend, and the ultimate oscillator points to a neutral to bearish outlook. Linear regression helps us understand the overall direction of the stock. While we don't have the exact values, the downward price movement and the position below moving averages suggest a negative slope. The time series forecast TSF at 66.38 is below the current price, hinting at some short-term upward potential. However, the broader trend remains downward, so any rallies may be short-lived unless there's a significant change in momentum. Looking ahead to the next trading day, the stock closed at $68.62 on September 17. Given the neutral momentum, it's likely that the next session will open relatively flat, possibly between $68.50 and $69. There's a slight uptick in momentum, which could support a modestly higher opening, but the overall bearish trend suggests that any gains may be limited. Traders should be cautious and watch for any signs of a breakout or breakdown. Support and resistance levels are crucial for understanding potential price movements. The immediate resistance is around $70, which has been a recent barrier. If the stock breaks above this, the next resistance is at $72. On the downside, support is near $65.60 to $66, matching the recent low. Interestingly, the 200-day moving average, a key support in many stocks, is actually above the current price, highlighting the bearish environment. The stock is close to both support and resistance, suggesting a period of consolidation. Average true range, ATR, is a measure of volatility. For PYPL, the ATR 14 value is 1.65, which means the stock typically moves about $1.65 per day. Based on this, the next trading day could see highs around $70.27 or lows near $66.97. With neutral momentum, movement in either direction is possible, but the overall bearish trend suggests a slight downward bias. This information can help traders set realistic expectations for daily price swings. Let's consider the bullish scenario. If PYPL breaks above the $70 resistance, it could continue its recovery and potentially reach $72 or higher. This move would likely be supported by increasing volume on up days and improving technical indicators. For this to happen, we need to see a clear shift in momentum and a break above key moving averages. Keep an eye on volume and price action for early signs of a bullish reversal. In neutral scenario, PYPL continues to trade in a range between $65 and $70. The market consolidates as traders wait for a clear directional signal. During this phase, technical indicators may remain mixed and price action could be choppy. This scenario often precedes a larger move, so it's important to monitor for any breakout or breakdown that could set the next trend. Bearish scenario sees PYPL resuming its downward trend, breaking below the $65.60 support and potentially falling to new lows. This would likely be accompanied by increasing volume on down days and declining technical indicators. If this scenario plays out, traders should be cautious and consider risk management strategies to protect their capital. To summarize, PayPal has faced a challenging period over the past 3 months. Despite some counter-trend rallies, the overall trend remains downward. Technical indicators suggest a neutral to bearish outlook, with the stock currently consolidating. This means traders should be patient and watch for clear signals before making any big moves. Here are the key takeaways. PYPL is in a consolidation phase with mixed technical signals. The stock is close to both support and resistance, so a breakout in either direction could set the next trend. Volume patterns and technical indicators will be crucial in determining the stock's next move. A cautious, wait-and-see approach is recommended for now. Volume is a key indicator of market sentiment. Spikes in volume often precede major price moves, whether up or down. For PYPL, watch for days when volume is significantly higher than average, as this could signal the start of a new trend. Combining volume analysis with price action gives a clearer picture of what's happening beneath the surface. No matter which scenario plays out, risk management is essential. Set stop-loss orders to protect your capital and avoid overcommitting to any single trade. Diversifying your portfolio and keeping position sizes reasonable can help you weather periods of volatility. Remember, it's better to miss a trade than to take unnecessary risks. Trend reversal could be signaled by a break above resistance, rising volume, and improving technical indicators. For PYPL, a move above $70 with strong volume could be the first sign of a new uptrend. Until then, the stock remains in a wait-and-see mode. Stay alert for any changes in the technical picture. Many of the technical indicators for PYPL are currently neutral. This means the stock isn't showing strong signs of being overbought or oversold. In these situations, it's common for the price to consolidate as traders wait for new information. Neutral readings can last for days or even weeks, so patience is important. Despite some neutral signals, the overall momentum for PYPL remains bearish. This is confirmed by the stock trading below its long-term moving averages and the negative slope in linear regression. Until there's a clear shift in momentum, traders should be cautious about taking long positions. There are a few short-term bullish signs, such as the current price being above the 5-day moving averages and a slight uptick in momentum. However, these are outweighed by the longer-term bearish signals. Short-term rallies can happen even in a downtrend, so it's important to distinguish between temporary bounces and true reversals. PYPL is currently in a consolidation phase, trading close to both support and resistance levels. This means the stock is gathering energy for its next big move. Consolidation periods can be frustrating for traders, but they often lead to significant breakouts or breakdowns. Stay patient and watch for clear signals. Average true range, ATR, isn't just a measure of volatility. It can also help set stop-loss and take-profit levels. For PYPL, knowing that the average daily range is about $1.65 can help you avoid setting stops too close to the current price, reducing the risk of being stopped out by normal market noise. Always combine volume analysis with price action. For example, a price breakout above resistance with high volume is much more reliable than a breakout on low volume. For PYPL, keep an eye on both metrics to confirm the strength of any move. In uncertain markets, it's wise to wait for confirmation before entering a trade. For PYPL, confirmation could come in the form of a break above resistance with strong volume or a breakdown below support with increasing selling pressure. Patience can help you avoid false signals and improve your trading results. Let's quickly recap the key support and resistance levels. Resistance is at $70 and $72, while support is at $65.60 to $66. The stock is currently trading between these levels, so a move outside this range could set the next trend. Mark these levels on your charts and watch for price reaction. Market sentiment for PYPL is currently mixed. Some traders see value at these levels while others remain cautious due to the bearish trend. Sentiment can shift quickly, especially if there's news or a major technical breakout. Stay tuned to both technical and fundamental developments. While this analysis focuses on technicals, don't forget to consider PayPal's fundamentals. Earnings reports, guidance, and macroeconomic factors can all impact the stock. Combining both technical and fundamental analysis gives you a more complete picture and can improve your trading decisions. Set realistic expectations for your trades. Not every move will be a big winner, and sometimes the best trade is no trade at all. For PYPL, the current environment calls for caution and patience. Focus on managing risk and waiting for high-probability setups. We value your input. If there's another stock you'd like us to analyze, let us know in the comments. Your suggestions help us create content that's relevant and useful to you, and if you enjoy our videos, consider supporting us with a coffee. It helps us keep improving our channel. Thanks for watching our deep dive into PayPal holdings. To recap, PYPL is in a consolidation phase with a neutral to bearish outlook. The key is to watch for a break above resistance or below support for the next big move. Remember to manage your risk and stay patient. Don't forget to like, subscribe, and share your thoughts in the comments. See you in the next video.